Welcome to your daily 5-minute crypto brief with Satoshi and Nova. Today is August 26th, 2025. I am Nova.
I am Satoshi.
You probably saw it. The total crypto market cap dropped maybe 3%, down to $3.86 trillion. Bitcoin took a hit, dipped into the low $110,000, and Ethereum slid almost 6% to around $4,640. Altcoins like Solana, Doge, Shiba Inu, even steeper drops.
Yeah, it's pretty striking how fast the mood changed. We went from quite a bit of optimism, partly off those Fed signals, to suddenly facing really heavy selling pressure. And weekends, they can be volatile anyway. Definitely a shift from optimism to, well, caution.
Okay, so the mood soured fast, but what actually caused it? This wasn't some big economic news dropping, was it?
No, not really. It looks like the main catalyst was very specific. A huge whale-driven rotation from Bitcoin to Ether. We're talking about a Bitcoin OG, someone holding for like over 7 years, suddenly moves nearly 23,000 BTC.
Wow, 23,000. How much is that worth?
About $2.6 billion. Moved it onto the hyperliquid exchange, just sold
it all.
All of it. And then with that cash, bought around 473,000 ETH, maybe $2.2 billion worth. And get this, they opened leveraged long positions on Ether, basically a massive bet that Ether's price would go up.
So one single player makes this enormous swap.
Exactly. And that alone caused Bitcoin's price to tank, and Hyperliquid's volume went through the roof. Record something like $3.4 billion in 24 hours.
Okay, so that's the initial shockwave. But what gets really interesting, I think, is the domino effect, these flash crash liquidations you mentioned.
Right, because that huge dump happened when liquidity was low, weekend trading.
Yeah.
It triggered forced selling, liquidations. CoinGlass reported something like $845 million in futures positions, just wiped out in 24 hours.
$845 million. Affecting how many people?
Over 166,000 traders, according to the data. Yeah. And mostly Ether contracts about $304 million, in Bitcoin around $272 million. It really shows how fragile liquidity and lots of leverage can just amplify these price swings, especially those leveraged longs getting squeezed out as the price fell.
Almost $1 billion gone, 166,000 traders affected. That's just staggering, a real reminder of the risks. But amidst all that selling and panic, there was a kind of counter signal, wasn't there? Something positive.
There was, actually. At the same time all this was happening, U.S. spot Ether ETFs saw record inflows.
Record inflows while the price was dropping.
Exactly. Combined net inflows of over 61,000 ETH. That's about $285 million just on August 25th. BlackRock's Ether ETF alone took in almost 24,500 ETH.
So what does that tell us? Institutions buying the dip.
Precisely. It looks like classic institutional dip buying. Big investors seeing the pullback as an opportunity, not a reason to panic. And that likely helped Ether bounce back quicker than Bitcoin, actually.
Okay, so institutions stepped in, providing some support. But with those massive liquidations, is that institutional buying enough? What does this mean for you, our listener, looking ahead?
That's the key question, isn't it? It really feels like the market's at a crossroads. You've got this institutional support, which is, encouraging, but you're balancing that against this lingering volatility, the risk from these big concentrated holdings like the whale, and maybe even some aftershocks from that long squeeze. Plus, there are always the bigger economic question marks.
So caution is still the word.
Definitely. For you listening, it means being careful. Things like having strict stop losses, avoiding too much leverage. Diversification helps. Having a balanced portfolio, maybe holding some cash. And keep an eye on those on-chain metrics and the institutional flows we talked about. They give clues.
So recapping, the last day or so really highlighted that intense push-pull in crypto. Short-term fear meeting, long-term institutional confidence. It was kind of a perfect storm, showing just how dynamic this market is. Volatility, like we saw, is definitely the price you pay for being in the space. But maybe the bigger question for you isn't just about surviving the dips. It's about understanding these undercurrents, the whale moves, sure, but also that steady institutional buying that might actually be building the foundation for whatever comes next. Stay informed, stay agile, and try to keep that bigger picture in focus.
You've seen the crypto headlines. Now get the signals that impact your holdings. Money.ai scans 1.3 million signals a day, from token prices to Twitter sentiment, and gives you one personalized briefing. No hype, no noise, just your crypto edge. Download Money.ai. Stay ahead.